Hello everybody, hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Yes, it's a new week, new start, and welcome to a new crazy week. Well, ladies and gentlemen, the oil market is just on fire, honestly, literally. That's why I've mentioned it in the heading. But look, about all that and a little bit more in the session right now. So hopefully you'll enjoy the video, the webinar, and yeah, look, I'll see you in a bit. Okay. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Yes, the 9th of March, 2026, and yeah, welcome to another crazy week. A crazy week of craziness, So if we thought that last week was crazy, well, I think we have a new interesting one ahead of us, because the morning that I woke up to is not the evening that I left on Friday. So um, again, look, I think you remember, if you were watching me a few times, like last week, the week before that, I was saying that there was like some sort of like calmness. The market was like it seems like getting prepared. It was like some sort of like a calm moment in the market, and it seemed like market is preparing for something bigger. Well, the bigger happened last week, and we are continuing now with this bigger thing this week. So basically, the world is falling apart again, and it's kind of thing. You kind of think that, oh right, okay, that's, we're back to normal, basically, because we kind of got used to the world falling apart in 2025. Now we're kind of back to that. So we started off the year like that with some sort of like craziness, and now. And now, yes, so we had like a little bit of a week or two of some sort of calmness, and now, yes, back to business as usual, right? Look, before we go any further, before we jump into the charts, as always, just a quick mentioning, actually not a mentioning first, a mentioning of our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Certainly, I'm going to do my little preparations here very quickly, because some websites are loading up, some not. So yes, it's a little bit of a mess, because I'm trying to load up the FedWatch tool, and for some reason it's not like, not really responding to my request here. There we go. Anyway, I'll jump into that in a bit. So yeah, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. So yes, I hope you read the rest. I'll put my usual, actually, good morning in the chat room as well. Good morning, everyone. And also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, the economic calendar. So, okay, look, let's start off from Monday, okay? So I'll just quickly try to run through economic data this week, the more important one, what to watch. And certainly, all this data will be most likely overshadowed by the happenings in the Middle East. But certainly, yes, it's good to know. It's good to be aware, why suddenly there are some action in certain instruments. So yeah, look, this morning we got a few pieces of information already. China inflation rate. Now that's probably the more important one. And now this is what I'm talking. Look at this. It was expected to come out at plus 0.8, came out at plus 1.3. Now that's a decent jump, to be honest, for something that has been very subdued for quite a while now. And we all understand energy is going to be a big part of it, because honestly, I'll jump into commodities in a bit, but you probably already saw yourselves what's happening in the oil market. So that is just insanity. So yeah, look, inflation numbers from China. So we're watching that. If you look at if you look at the chart here, so it has started to pick up, and it started to to rise kind of quite rapidly, I would say, not at the levels of where it was, let's say, back in 2023, but I think we're going to be heading towards that 2%, the inflation target of the central bank, the 2%. So I think we're kind of on that route. So yeah, we'll keep an eye on that, but certainly inflation is becoming the big problem. And I talked several times about this at the end of last year because what I said, that stagflation is something to remember for everyone. I'm not saying that this is what's going to happen, but certainly you have to really, allocate a decent amount of your brain capacity towards, figuring out what could happen next, and in terms of like how can stagflation actually appear. Just to remind you, this stagflation is basically when you have low unemployment, low growth, and high unemployment, low growth, and high inflation. So that's something to kind of, like I said, worry. And I think that this is what we're heading to, judging also by the recent job numbers as well. And honestly, if everybody's going to start talking about how AI is great, yes, AI is great for businesses because it optimizes their process flow, and in general it cuts cost. However, yes, it's a contributor to stagflation because we humans do not know how to transition smoothly from something to something. We normally do it at like in extreme ways, in extreme moments. Oh, look, I would say this way. Market declines are still beneficial. Some dream of market declines because again, in those moments you can actually buy cheap. However, you always need to take kind of into consideration the fact: are we actually at the bottom, or is there more room to go lower? So look, anyway, I'll pick up at everything, and I'll look at the charts in a moment, but very quickly on the data. So okay, Japan, nothing major. What we're watching today, Germany, factory orders. There we go, minus 11.1% month on month. Industrial production in the negative territory. It was expected to go into positive, but hey, it remains in negative territory. So yeah, but factory orders certainly is a little bit of a disappointment, I would say, if the word "a little bit" is actually it does actually have a place to be here. Now, consumer inflation expectations. We're watching this one today from the U.S. Nothing major, but just a number that could spill in nicely into Wednesday and Friday because we're getting the US CPIs and PCEs this week. So Tuesday, tomorrow, Japan household spending. This is actually quite important data from Japan, so keep your eyes on that. Then we're going to go further into Japan, into their growth rate, GDP growth rate, the final figure. So yes, the expectations are actually quite positive. However, I would say don't rush, okay, with this one, because again, the way everything is shaping up right now, it's kind of a tricky moment, I would say. So just be a little bit more on the careful side. Going further down the line, NAB business confidence. This is from Australia, so keep that in mind. Mainland China. Now, trade balances. Now, this week we're going to have a lot of trade balances from different countries. It's going to be China and Germany will kick off. Then I think it's going to be Canada and U.S. So we'll see how numbers look there, because those are quite important actually. If you don't look at trade balances, I think that this is just like a general indication of what's happening with the economy. Is the economy importing more, or how the exports are looking? Because if the exports are dropping and let's say exports are dropping and imports are dropping, now you might see there's a problem that the country is struggling maybe to sell or produce, and if the imports are dropping, then certainly you can see that maybe the consumer demand is actually weakening. So again, quite an important number to watch, in my opinion. So, but then jumping into Wednesday, PPIs, Japanese PPIs are coming out, so keep that in mind. Inflation numbers from Germany. So yes, harmonized and kind of normal headline inflation rate. And there we go. The inflation rate year on year, the headline 1.9 is expected against the previous 2.1. Now, maybe again, I really don't want to say anything, but maybe I'm personally leaning towards the slightly higher number. However, we understand, because again, it's the lag is, this number is lagging because this is going to be for, I think, the previous month, or even if I'm not mistaken, maybe for January as well. So let me just double check. I don't want to lie to you. Let me just it's this week, so this is Wednesday, and German. Yeah, it's going to be the February one. So yeah, apologies. So it's going to be the February figure, because sometimes you need to be careful with that, because sometimes it's the month before that even. So yeah, the February figure is coming out. Look. We had a somewhat of a quiet February, I would say. Somewhat. Again, it's of course the word somewhat is subjective, and it's like in quote marks, but that's what we're saying. That's what I'm saying. So be careful. Let's see what the number will be. But certainly we are seeing some reports this morning that the ECB is now shifting actually towards rate hikes. Ooh, now that's interesting. But this is logical. This is what I was saying last week, last year as well. That when you drop the rate to closer to 2%. Right now the interest rate is what, 2.15. Let me just double check. Yeah, 2.15, the euro area. You're not going to drop it below 2. You're not Switzerland. And you're not gonna drop it below 2. You're not Japan, you're not Switzerland. So that's why I think that the more logical path for the ECB was to actually go and hike rates. And when I when was it, like 2 weeks ago or something like that, Christine Lagarde announced that she's not gonna extend her welcome. She's gonna leave when she needs to leave, and I kind of understand her. You don't want to be in this mess, because the world is getting messier, and you have rising inflation that she will have to then justify why she's hiking rates and stuff like that. The public will probably not understand, although this is normal, standard procedure in a way, but of course then you will receive a lot of criticism. So you're leaving at the peak, and it's fine. You pass on the problem to someone else. This is it seems like that. But yeah, certainly we're going to be watching inflation here in Germany. Let's see what's going to happen. And yep, something kind of, I don't know I don't know if we're going to see a higher number this time, but March figure, I'm kind of leaning towards a higher number. Anyway, going further down the line, now this is, like I said, on Wednesday, the CPIs, the US CPI. Okay, look, the headline consumer price index is the headline here. The figure is expected to come out higher, 2.5 against the previous 2.4. Again, I will probably apply the same logic to this one as well. Maybe the February figure will be okay-ish. However, the March, going into March, when we're going to get it in April, that figure might be a little bit even on the higher side. So look, the Federal Reserve interest rate, the inflation target is around 2%. So something like that is already above the target, and this is where the Federal Reserve will have to. Why is this not loading up? Honestly, how many times I have to refresh this one? They will have to consider actually the fact that, do they want to go for hikes, instead of those cuts? Because why is it not uploading? Is this? Let me just minimize maybe the amount of CME, oof, CME Fed Watch tool, come on, load up. Oh, is this where we're gonna live with? Anyway, look, I hope it's gonna load up, because for some reason it's not loading up on my side here, but maybe it's loading up on yours. But what I wanted to say is that the next FOMC meeting is in 9 days, right? And we understand that nothing is going to happen there. Let me just go back into this. No rate cut is going to happen there. I think it's going to be on the 18th, Wednesday. So, yep, Federal Reserve interest rate decision. There we go. So 3.75. Yep, that's what we're going to stay with. Certainly, the press conference is going to be maybe a little bit more interesting. That said, if it's going to be as boring as last one, yeah, I think this is what we're going to be getting for the next two more sessions, because there's one in March, and there's one in April, which, yeah, it's not going to load up. I wanted to show you the dates, but anyway. So look, long story short, for now we're carefully monitoring the situation with the CPIs, with the PCEs, because the CPIs are expected to come out on the higher side in the US. We do have actually also, starting to become relevant and important, the EIA crude oil stock change number. This is something that, if you're trading oil, and probably you should be, if you love volatility, then yeah, you need to keep an eye on this number as well. So this is, for the sake. But I always say, ladies and gentlemen, honestly, be careful, have your stop losses in place, because this can really get out of hand very, very quickly, because the jumps that we're seeing, the spikes, the drops, those are crazy. But I'll jump into that in a bit. Going into Thursday, what to watch out on Thursday? Australian consumer inflation expectations. Keep that in mind if you're trading something AUD related. BOE's Governor Bailey's speech. Okay, this is going to be an interesting one. Maybe a few, notes on if the bank is also ready to go for a hike at some point, because I think that they're all going to shift eventually. Because look, Australia's RBA went first. And I said that when they came out, let me just remind myself very quickly, 3.85 they came out with, and that happened in recently, like in February. Yeah, interest rate decision happened in February, the beginning of February, where they came out with a 25 basis point hike. And honestly, I said it then, and I'll say it, and I'll say it again. I think for now, at least for now, the RBA seems to be as the more wise one in general, what's happening, and more direct. This is like, yeah, we're gonna do it, like, and then most like there are gonna be a lot of critics. Oh my God, what are you doing? But like blah blah blah, But I think that they're, for now, at least, it seems that they're the more reasonable, and they understand that inflation is going to be a problem. So, we're trying to be maybe ahead of the game a little bit. Of course, somebody will say, but while inflation did not rise yet, why are you, why don't you kind of, let inflation show the first moves of going higher, and then you start hiking rates, because you might end up, with more hikes than you need. But this is, again, it's a stick with two ends, because sometimes maybe actually that little waiting period, because there's a lag, maybe you're going to be, actually playing the catch-up game with the hikes. Maybe just, to go and kind of try to kill it earlier would be easier. Again, it's just a thought. There's a lot of different opinions on this. Of course, you can say your opinion if you wish. I'll be more than happy to listen, because my opinion is not the most correct one. It's I'm an analyst. I see it one way. I respect other people who see things the other way as well. Well, that's normal. That's kind of, it's kind of common sense. Anyway, balance of trade balance, USA, Canada coming out on Thursday. So keep that in mind. This is going to be quite an important number, I think, in my opinion. So we'll see if the number actually does fall. There is an expectation that, the number fall, it doesn't, it basically, the gap diminishes, so let's see if that's going to happen. For now, certainly it's, Yeah, it's a relatively big one. And then the same day, housing starts, building permits. I think that's what's happening. Yeah, from the U.S. Look, initial and continuous jobless claims, something to keep in mind. There are a few speeches of Fed officials here and there, but I think that what those officials are going to be very much keeping an eye on, and that will be the Friday's PCE, which is coming out. So the Fed's favorite inflation metric. I'll get to that in a bit. Just before that, in the morning, we're getting the trade balance of UK, and honestly, this is also something to watch out for because look, although UK's economy is seen as a relatively strong one, but still, they do have problems and it can escalate very quickly. So be careful with that. And yeah, so like I said, the headline PCE figures are coming out from the US. What are the numbers? Let me just double check here. So PC price index year on year 2.9. So I'm not going to be surprised if it jumps somehow to 3. Really, I'm not going to be surprised. This one, the headline includes oil and gas prices. Let me just show you what I'm talking about here. Where's that? There we go. So where's the actually the easier way, the other way around? This is the excludes excluding the prices of food and energy. There we go. So look, long story short, for now, like I said, we're expecting the core to go higher, and this is the interesting bit. If where the core is sitting at 3.1, basically higher than the PCE with the 2.9 here. But that is because the service sector started, getting more expensive, and the service sector is also, yes, it's feeling the heat. And I said it before that, look, those tariffs that were announced almost a year ago, right? In April when we saw that, the big board next to the head of the U.S. leader, those are now taking its effect. Normally for people, it takes roughly like a year or something like that to understand that there is a problem. It's like rational expectations. So you think that everything is in equilibrium, everything is correct. However, that is not the case. So like I said, we have a lag of roughly like a year or something to understand that, oh, there's a problem. So there we go. Since April of last year, we almost have a year now, and congratulations, we have arrived. We have arrived to the basket of problems caused by the tariffs. So we'll see how it plays out. Of course, we also have a little bit of a conflict in the Middle East. Yeah. And unfortunately, where, as always, it's like, honestly, I keep on saying that this is like, these unnecessary wars are just, there is no such thing as necessary war, but, normally when some sort of like crazy thing happens, and then, yes, everybody goes fighting with each other, but this one is just, you don't like the leader, but you don't like the how to say it, the management of the country, but when somebody else does that, you're accusing them for, because it's a sovereign state, and that's why, so it's honestly, the world is hypocritical, and and also when you're watching the news, when they're covering one conflict this way, but the same is covered in another way, more favorable way, then honestly, it's really, and in general, I saw one phrase recently, which this morning, that actually it's just it's a reminder that you have wars you have money to do wars, but you don't have money to feed the needy. Come on. Anyway, the people who are actually not the needy, maybe the word the needy is not the correct way, but let's say the ones who are hungry right now, who are people who are suffering and starving. There's more, so you have money for that, but you don't have war is profitable as always. So yeah, we're watching this. We're watching the numbers here. If the numbers start escalating, certainly the Fed will have to consider not to go for cuts this year, in my opinion. But again, we'll see what happens then. Anyway, so this is how we're going to go through the week. Let's jump into the charts, ladies and gentlemen. The first one I want to pick up here is Nikkei 225. Okay, look, this is an interesting moment happening here right now. I am just watching right now how everything is just kind of collapsing in a way, like honestly. Look, the market here, Nikkei, opened with a gap, well, not with a gap even actually, just opened lower and that's it, just fell off the cliff. And we actually, look at this, from the technical side, we broke the upside line, which I talked about several times. This one's taken from the low of the lowest point of April. As you remember, this is what I was talking about. This is the big board of tariffs. Since then we reversed. Yes, we rallied. Fantastic. Look at this reversal from here, right? If you, I don't know, somehow managed to, if you had a crystal ball and you managed to pick it up from the bottom here, we rallied all the way and gained around 93% at one point at the peak here. Now we're gaining only around 70%. So congratulations to those who are, who are in profit from this rally. And for now, honestly, the problem here is that we broke the upside line here, and now it's kind of pointing a little bit more towards the downside. And yes, we found support near the 100-day EMA, shown as the blue line. But then the question is, are we gonna, is this gonna be sustained? Are we gonna stay? Are we gonna stay above this 100-day EMA and this 52,000 kind of 500 zone? This is, again, it's never the exact level, it's the area near that level. Let me just double check something here. Oof, it is really, my computer is a little bit on the lagging side today, so apologies if there are some interruptions or something like that. But there's a lot of things happening, and I do have way too many screens open. But anyway, so yeah, look, Nikkei 225. Like I said, keep your eyes on the data, economic data, which I mentioned already. There could be some interesting action here, but of course, certainly for Nikkei, the problem is oil. The problem is oil, and because the strong big price on oil is eating into the profits of Japanese companies. From what I understand, from what I read this morning, that around 95% of Japanese oil does come through the Strait of Hormuz, which is talk about like the diversification, which is a problem for them. And Nikkei, like I said, is feeling the heat and not loving the situation. And I was really hoping to see that psychological 60,000 zone. We were not far. Oh well, maybe way too many people saw this as a potential target as well, and that's why it didn't go, because that's how normally it works. So look, for now, long story short, just going purely from the technical side, yes, there is actually some room for more downside. Initially, I have to say that when I was saying that I'm seeing this more as a profit taking moment here when the conflict started. And on Monday, I remember I said that I see this more as a profit taking moment. Well, I think the tides are shifting a little bit, and I'm kind of now getting a little bit more worried about this, are we gonna see the 70s moment? All right. So we'll see, because look, the high oil prices are going to be a burden on many. For oil producing countries, this is somewhat of a good fix, good short-term fix to gain on, to get a little bit more profit. That said, longer term, of course, higher inflation. So those so those short-term gains, those profits, in a way, theoretically, should be used to support, your nation, because there will be, like I said, there will be problems with inflation. However, that doesn't happen very often. So yeah, we'll see what's going to happen next, but certainly because, like I said, inflation will become an issue. Let's see if the stock market, somehow recovers a little bit in the short run. But in the longer term, if all the central banks will start shifting um, towards higher interest rates, I mean, honestly, I don't see, and I'm starting to see not a very bright future. Again, I don't want to be the pessimist. However, look, everything is fixable if you just stop bombing, period. But I don't think, maybe this is the bombing campaign where it will allow for investors to actually pick up their favorite stocks on discount and enjoy the rally, and then the bombing stops, so that the investors could enjoy their profits, because the stock market will rally again. So long story short, we all know who started this madness. So it's kind of, and it's not Iran. Anyway, long story short, for now we're watching Nikkei. For now we're watching other indices here. Kospi, for example, Kospi's doing kind of okayish. Shanghai Composite is doing okay. It's just Nikkei, which is from the top Asian indices, which is kind of suffering hard, suffering big. Kospi is also, but it opened with a gap to the downside, so it's a bit of a different story here. Whereas Nikkei is just plummeting, like just selling off. This one opened already with just a gap, so it's okayish. But Nikkei, yes, it is just showing us that it is not feeling the love right now. Look, I'll say it this way. For now, keep an eye on this. Certainly, keep an eye on the stock market. Look at, for example, the U.S. indices. Those are just also selling off right now. Let me just double check very quickly. We're seeing some negativity. The cash index currently is trading at around 46,800. So basically, yes, well below. It's actually near. Yeah, there we go. It's actually near the 200-day EMA. Look at this. Ooh, interesting. So we will have a gap to the downside today. We'll open up. So we're going to have another runaway gap here, and we're going to stall near the 200-day EMA. Now the question here is, for me right now, are we actually gonna get a hold up and then a rebound from this 200-day EMA, or is this it? Are we going to actually see further declines? If we do fall below on the daily chart, if we do fall below the 200-day EMA, I think that yes, it will turn very sour very quickly. S&P 500, similar story with the S&P. Let me just double check what's happening. In that market, I think where the price is currently sitting at 6,630. So yes, again, closer to the 200-day EMA. So let's see what's going to happen there. Nasdaq, let me just quickly check Nasdaq. 24,290 roughly. So also closer to the 200-day EMA. So that's going to be quite an interesting opening session. And look, I talked about this last week. I said that look, we're in a range, we're in the box, and the prevailing trend was to the downside, so the greater chance for this one to break out is lower. So we're now already like breaking through the lower side of it because of the whole oil madness. But if by any chance somehow today, when the U.S. market opens up and we see some sort of strong buying activity, which going to push the price back inside the box, honestly, this is going to be very interesting, because then maybe the buyers could kick in. So keep that in mind. Ladies and gentlemen, let's jump into Europe very quickly. So there we go. Of course, look at this. I talked about this 200-day EMA as well. I said that if we do fall and stay below it, I'm going to lean further south. There we go. My target kind of got reached, the 22,943. Boom. There we go, ladies and gentlemen. That's the lowest point of November of 2025. Okay, what's next? Well, pretty much straightforward. You know, we created a gap here. The market tends to fill gaps, but again, it's, you know, it's not a guaranteed thing. Nothing is guaranteed. For example, here, you know, we also filled the gap a little bit, but you know, here we didn't fill the gap. So yeah, it's like, but this, because this one's kind of a really big one, I would say. Maybe there is a chance maybe to, you know, to see a little bit of a rebound. Not much, to be honest. But maybe there is a chance to see a rebound here back to the upside. Let's see what's going to happen here. The FTSE 100 continues to slide, and we're near the 100-day EMA. I think this is doable. I think we could end up reaching that. So let's see. Let's see if this 100-day EMA holds. If it does, great. More buyers here could join in. CAC 40. Honestly, look at this madness. Look at this bloodbath. From the peak here, from when we were back at the end of February, I was talking about this one actually, if you remember. Look at this. We are dropping 10% at least already. 10% drop from the peak. Wow. This is spectacular. We are going through some interesting times, ladies and gentlemen. Remember this? This was April, right? In April here, when we were at the peak, we started falling and we dropped around 18%, something like that from the peak. Now we're at around 10 on this one. So a few more percentage points could be somewhere, maybe minus 13,000, so 7.5 zone could be the case here. Let's see if that's going to be that's going to happen, because this is a good area of support here, somewhere around the 7,500 ish. Let's see if that's going to be the case. DXY, very quickly, dollar index. Certainly the dollar is gaining right now, enjoying life. We are seeing, you know, like I said, this positivity kicking in into the US dollar, because again, yes, it's a safe haven. However, let's not forget, you know, who's bombing in a way, whose military equipment is used, and you need dollars for that to purchase, you know, that country's military equipment. So, and yeah, it's and also the US dollar is gaining because, look, the US is a major energy producer, right? We know that they're selling a lot of gas, their natural gas, they're selling a lot of oil. So when you have disruptions like these, you know, the Strait of Hormuz, it's actually beneficial for the US side, because it can sell now. It can sell oil, it can sell natural gas, and you know, it's coming out as a winner. And it can be that, you know, especially for Europe, and because nobody knows where to go, and you know, you go to US, and yes, and also when when they have took control of Venezuela as well, then you know, you have another source of income for them, and because you're taking, you know, your little cut. Well, Chevron is taking a little cut, and certainly, like I said, this all works out amazing. It's, at least it seems like that for them. So let's see if this conflict, it seems like it might actually drag on a little bit longer. Let's see what's going to happen there. Let's have a look at VIX. Honestly, the volatility index here, you know, it reached 35 at one point here, and now it's drifting back down a little bit. So I don't want to say anything else yet, but I don't think that it will go down yet. I think there's a little bit more room for some more upside on that one. But again, let's not rush into conclusions yet. Okay, just keep on watching this one. I think it's a good indicator to understand, you know, to see what's happening in the market. Let's jump into Forex, AUDUSD. So yes, the stronger dollar is helping AUDUSD here to move lower, and helping the bears, I would say, of AUDUSD take control. And for now, look, we broke the box. I talked about this. It was a very straightforward analysis. If we do break the lower side of the range here, then yes, I'm going to consider a little bit of a move to the downside. AUDNZD, we're stuck here. We're near this 50% on the Fibonacci retracement. To remind you, this, and I jump into a monthly chart. This is taken from the highest point of 2011 to the lowest point of 2020 period, 2020. And we did a 50% retracement. So we did a 50% retracement. Now the question is, what's going to happen here next? I mean, are we going to clear this 50%, or actually we're going to, go back down? Something tells me that maybe a little bit of a retracement back down here could be possible. But again, let's keep an eye on the 50% here on the Fibonacci retracement. AUDJPY, or risk on, risk off monitor. It's the Japanese weakness, the Japanese yen weakness, and honestly, you should be seeing a Japanese yen picking up buying interest, but honestly, it's not, because I think that the Japanese yen is waiting for the Bank of Japan interest rate decision. So yeah, for now, it's all, like I said, it's all just. It doesn't really represent the real picture. At least it seems like that, the AUDJPY situation. So nobody's jumping into the Japanese yen yet. Okay, maybe somehow this is needed for the government, for the government of Japan, because you need to keep your exports at this time more attractive. So why not? Maybe this is a little bit more artificial. What we're seeing in terms of the price of Japanese yen. Look at this, Canadian dollar against the Japanese yen, just soaring, honestly. EURUSD, ladies and gentlemen, dropping, but no, I would say maybe not all investors have picked up on the fact that the ECB is kind of considering to go and hike rates in 2026 this year. So if they eventually pick up on that, and the tensions in the Middle East do kind of calm down a little bit, maybe then we'll see a reversal here in the euro. But in the EURUSD at this point, no. Oh, excuse me. EURUSD at this point, I think that what the problem is that it's the US dollar, of course. This is the driver right now. This is the one that's pushing all these pairs, dollar denominated pairs. Sorry, not denominated, but quoted in dollars pairs to the downside here. So for now, like I said, I think that yes, it broke the upside line, it broke the 200-day EMA. So let's see if it can stay like this, like this for a while. But long story short, I think that I'm leaning a little bit more towards the downside, and I'm going to stick to that. Going further down the line, EUROCHF, this one's interesting. This one's falling, but hey, wow. I mean, this is it can recover. Don't get me wrong. There is a chance for some recovery, but there's certainly. I think this will continue falling if there is a problem with oil price, if that one's going to continue soaring. EUROJPY, again, similar story with the Japanese yen, just it's stuck here. At this point, it seems like it's a battle of the weaker ones. Sorry, my voice is going down, I need a little bit of tea. So for now, not much excitement here in the EUROJPY sense. For those who are watching this live right now, let me know what you're trading, because then I can maybe pick up on that a little bit more. Going further, let's jump into GBPUSD actually. Let's see what's happening here. GBPUSD, yes, drifting further south, still within the falling channel. I talked about this. Now, the falling channel should be seen as something of a positive thing, because we are kind of, like we have the prevailing trend to the upside, right, before entering this falling channel. So the greater chance in a way is to see a breakout higher. However, I'll believe it when I'll see it. So if we do get eventually that breakout through the upper side of the falling channel here, then yes, I'll consider some higher moves. But at the moment, yep, while we remain inside the falling channel, yep, it is still to the downside. USDCAD very quickly. USDCAD here dropping nicely, beautifully. There we go. There we go, ladies and gentlemen. Canadian dollar did pick up buying interest because it's the it's the fact that the Canadian dollar really dependent on oil, and the oil market is the driving force of Canadian economy. So hey, there we go. All is working out nicely here. And I talked about this last week. I warned you about this. I said, look, don't rush into those buys. Yes, we were very close to the this downside line, the upper side of the triangle, but the prevailing trend before entering this triangle was to the downside. So the greater chance for this one to break out is kind of to the downside. That said, of course, surprises happen. This is just theory. In general, what you hear all the time, everything is theory. We want to see it happening in practice, but we never know what's going to happen. But we try to position ourselves carefully, and as always, with some stop losses. Now, look, what I can say here for now. Watching this very carefully, and honestly, if this somehow breaks through the lower side of this little triangle, then yes, I'm going to lean towards the downside. USDJPY continues to push higher, of course. US dollar strong, there we go, continues to climb. And I think that, yes, more upside here is possible. I did a little piece here last week on this, and 157.72, I pointed out if we get a clearance of this, my next target is the 159.45, the current highest point of this year. And if that gets cleared, a forthcoming higher high will be confirmed. So, USDCHF also trying to climb, higher, but it's kind of a little bit, it's a battle of the safe havens right now, in my opinion. So let's see which one's gonna overthrow which one. Ladies and gentlemen, let's jump into the commodity world. Gold, of course, dropping lower. Look, I talked about the gold, and I mentioned gold, and honestly, I said to you this previously that with gold, whenever times go sour, you have to be careful, because it actually could point towards like more weakness in gold. If somebody's thinking that, oh, this is a safe haven, it should be, it should be kind of it should be rising in a way. It did initially give a little, a little bit of a boost. It had a little bit of a boost, but then it kind of calmed down, because it's logical. Look, if you're, you were purchasing a lot of gold, silver, especially countries, right, all around the world were buying, piling up. I think this is the best way to get some money when the times go rough, especially when inflation hits, because then you'll have to support your population, and if the population, but you need to then maybe print more money, to or increase interest rates, and look, this is, like I said, this is the problem then which arises. Then you have way too many different problems attacking you from different sides, so you need to get some money from somewhere. And congratulations, if you sell a little bit of your precious metal reserves, not all, you sell a little bit, you gain a little, you get some good money, you can put that money into the economy, so in a way supporting your own people. Now, does that happen? Well, not always, because there's corruption involved, and it's not always about the people, right? I mean, it's not in general. It's not about the people. People are, we're commodities. But certainly, what I'm seeing right now is, not to mention the technical picture. Honestly, I talked about this. I said to you, look, previously, if you watched my sessions here recently, I did throw out some pieces here on On gold and silver, there we go, right here, quick update. That was like 9 days ago. And I threw out this little piece. I said, look, we're forming something of a rising wedge. That's one thing. That's one little bearish indication. Then we have a pole, we have our little correction. So kind of something like a bearish flag. Second indication, right? So we broke and in general, we're failing to go for a higher high. So we're creating a lower high. So that's another indication that something is wrong, something's brewing here. And there we go, we get a breakdown. We get a breakout through the lower side of this rising wedge. Okay, perfect. That confirms the downside scenario, but then we have a little bit of a bearish flag here, a little small bearish flag forming here. We're getting a hold up near the 5,093 territory. So this is a good area to watch, in my opinion. Again, it's not ideal, but certainly there is a little bit of a holdup happening here, together with that, this little hurdle together with the 20-day SMA within the Bollinger Band is providing good support. So in general, everything is really pointing towards the downside on precious metals. And I think that, yes, there could be some more downside on this one. So for now, just keep an eye on that, the 5,093 territory. If that gets cleared, if we clear the 20-day SMA within the Bollinger Bands here on the daily chart, then yes, I'm leaning towards the downside. The 4,880, I think that's something that we could consider. So keep that in mind. Silver, similar story. Look, silver maybe is doing, I wanted to say a little bit better than gold, but look, it's maybe too early to say who's doing better, in general. But for now, what I'm seeing here is then, yeah, it's also forming something of a bearish flag, not to mention a wide rising wedge formation that we have right now. It's not an ideal picture because we need some, tests here as well. We only have 2 touches, but maybe it's not even going to happen if the market starts selling off earlier. Then yeah, gold silver ratio, that's something that I watch, and this is how many times gold is more expensive than silver, and well, it's around 60 right now. So gold is holding off better. Silver is in general, it had its moment. It had its moment. Now it's just falling off the cliff. At least it seems like that. Platinum, similar story. Platinum, palladium, all these guys are gonna go lower if gold and silver are gonna go downside as well. Apologies for the cough. Copper, yep. This one's okay. The copper is a different story. It is needed still, so it's used widely. So other ones are also used widely. This one we really need it. Look, I wanted to pick up on wheat, actually. I haven't looked at this one for quite a while. So grain, yep, because there's a problem with, the Strait of Hormuz, then the grain is also having a negative effect, because it's getting stuck. It's getting stuck in there, and the ships are not coming through. But apart from that, apart from just looking at wheat from the food perspective, do I have corn here as well? Let me just double check. Corn futures, because corn futures. There we go. Corn futures. Look at this. They're also, this is also rising. So corn and wheat. You have basically an increase of demand in the plant-based fuel. So when you're making plant-based fuel, congratulations, this is what you get. This is what you get in wheat. This is what you get in corn. And this is, like I said, because you have disruptions in that market, in one market, you're trying to find a substitute. And well, this is what we get. This is what we have here. Long story short, for now, this is the problem. Certainly, look at this. At one point, we have almost reached the $120 mark on WTI oil. What's interesting, at night I was waking up and kind of watching this, because at one point the difference between, look at this, it was zero, it was almost zero. Actually, it was slightly fractionally below zero, where WTI oil was actually more expensive than Brent oil. Now that doesn't happen very often. It does happen, but not very often. And honestly, now we're seeing this balance getting restored. I think that, yes, Brent is picking up buying interest right now. WTI oil is kind of stalling a little bit. So normally, like I said, the difference is like between like $4 and $5. Actually, let me just check the chart here. Yeah, it's like on average, like I said, it's around like $4 or $5 here. So we're climbing very rapidly back up here. Look at this. And right now, Brent, like I said, is picking up in buying interest. WTI oil, it could do that as well. Again, we're currently seeing a little bit of a stalling moment. I think that there are some emergency meetings where maybe they're thinking of throwing in more supply into the oil market. But again, honestly, as my title says, that crude oil is on fire, literally. Well, the U.S. and Israel did bomb an oil refinery in Iran during the weekend, and that is just a major blow in for everybody. In my opinion, then that's why you're seeing such a major jump in oil. Yes, the Strait of Hormuz is a problem, certainly. However, it's the fact that you've hit Iran's oil, then we're now seeing targeted attacks on refineries. So in Iran, and if they're also gonna, if the U.S. and Israel are gonna somehow damage the whole ship, the whole oil loading on ships in Iran, I think that yes, we're not seeing the end of the maybe 120, but this is, like I said, this is just crazy. Looking at history here, look, we are seeing these spikes, major spikes. We last time saw the spike back when the Ukraine conflict started. Then before that, we saw in the markets were exploding here to the upside. We saw 100 and at one point almost $150 per barrel, and that was back in 2008. Ladies and gentlemen, are we going there again? Is this what we're going to see? I don't want to be the bearer of the bad news, but the way everything is shaping up, and because we are now in a world where we have different, we have improved weaponry, we have there are capabilities of targeting specific infrastructure more precisely. So if right now the goal is to damage the Iran oil facilities, then I'm sorry, this is not going to look very pretty. So that's what I'm saying. Be very careful, be very cautious. This is, like I said, this might get very quickly out of hand. So very quickly on natural gas before I jump into the crypto, and I'll wrap this one up. Natural gas, yes, understandable. Look, in general, look, I talked about this falling wedge pattern here. I've mentioned this, and in my video here recently, quick update on WTI, Brent, and natural gas. This is, like I said, this is something that I was talking about. So there we go. We had the pop, we had the move. Congratulations to those who are holding this. This is, like I said, it is a very good, straightforward, technical picture here. And the question is how far it can go. Well, I'm targeting something around the 3.65-ish zone right here, near my EMAs on the daily chart. So if I can get that, okay, great. Like I said, this is going to be a great result, because then this, like I said, this worked out nicely. But let's see. Like I said, the conflict is ongoing, and I really don't want to get ahead of myself too much. Like I said, I don't want to really speculate on this too much, because, like I said, it can really, as it can go very quickly to the upside, it can really reverse back down very, very quickly. So just be careful, keep always that in mind. Ladies and gentlemen, you just need one headline, honestly, that they're stopping the bombing or something like that. They have achieved their mission. But given that there's a new leader, the new leader of Iran, and he's the son of Ayatollah Khamenei. So yeah, it's going to be an interesting moment, because this is kind of giving you giving the U.S. and Israel like a green light to continue bombing, basically. So anyway, the crypto world is not loving this. Initially, at one point, we were seeing good results here. 73, 74 territory here, 1,000, of course, was, seemed like we're going to hit that, we're going to break that, where we did come very close to it, but we failed to break through it, and we're seeing, we saw it drift back down. So long story short, I think if you're looking for some lower levels, those are not off the table. I think that yes, more downside could come, and if we do clear the 65,000 area, then I think yes, further declines are possible. Other cryptos are also not feeling the love. Look at this Bitcoin Cash. The Bitcoin Cash is near the 445 area, so it's not really. It's holding. It seems it wants to go further south, and if it does break this area and stays below this area, then I think that yes, 300, 75, 70, 74, 76, something like that area could be possible here. Ripple, similar story, but okay, with almost similar story. This one's still holding above this 1.3415 areas right here. So this is a good area of support. At least it seems like that for now. It seems like the market doesn't want to break this. It's loving this strong area of support, but I cannot really get positive with this as well, because for this one, I need to see a break of this downside line right here. So if you're looking for some, higher areas, then I think that you need to wait for a push somewhere back above the 1.46 territory. Ethereum, Ethereum is like, oscillating around that psychological 2 level. Basically, everything is in a range. Everything is in the box here. Everything is stuck. And everything is just kind of waiting for the next catalyst here in the crypto world. So yeah, I cannot really say anything else apart from, if you're not really comfortable trading this right now, just don't. Don't, because yeah, it's just gonna, you're just gonna break it. Sorry, but for some reason this is coming through. It's just a second. Yep, Ethereum Classic also in a little box here, in a little range. As you can see yourselves, everything is, like I said, everything is stuck. Now, my problem is, if you look at this from the technical side, of course, everything is basically more bearish than bullish, because the prevailing trend before entering this range is to the downside. So according to all the TIA rules, this tends to break lower. That said, we need to wait for the confirmation, and then we can do something about it. So always wait for the confirmation break, and then you can do something about it. But before that, it could actually, maybe create a bunch of bottoms here and just reverse back up and clear the upper side here, and then yeah, push higher. Litecoin is also similar story. Look at this. Also, everything is in a box. Everything is nicely packed. Waiting for clearance. I'm not going to say anything else apart from just waiting for the clearance. Oh, come on, honestly, ladies and gentlemen. I just put it on to not disturb. Why is this coming through? Just a second, ladies and gentlemen. I think that what happened here. Okay, I think it's time for me to end the show. Okay, look, very quickly on Dogecoin, similar story. Again, box, Polkadot, also. This one looks a little bit more bullish, to be honest, because it has some sort of like a bullish flag formation here. But again, I will believe it if I see a break through the 1.70 territory somewhere around here. If I get that, great. More buyers could join it. And very quickly on the final one on Tron. Now, Tron is the more logical one in a way. So this one's holding up nicely. And in general, I like Tron, honestly. This one's really acting like a real normal currency, and it's really not doing any bad things or something, it's like, it doesn't have those big swings, and like I said, it's acting like a normal currency pair. Anyway, clearance of the 0.2881 is needed in order to go higher, at least For the downside, a drop for me below the 0.28 zone here would be required in order to get a little bit more comfortable with some lower areas. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I tried to deliver my best. I tried to, prepare you for this day as much as I could. But look, I hope you have any questions. If you don't have any questions, that's fine. If you have questions, feel free to drop those in the chat. I always encourage everybody to to try to communicate, because this is a live session, and you can basically throw out your questions at me if you have any, and we can go from there. But I'm always in for a good dialogue. Look, ladies and gentlemen, but if nobody has any questions, thank you very much for watching and listening. I hope you found it useful. Join me on Wednesday. Wednesday, again, the same time. We're gonna pick up on this crazy market. Don't forget that we have the CPIs on Wednesday, but I'll remind you about that on Wednesday. So yeah, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you on Wednesday. Bye bye.